Ladies and gentlemen, how you doing? Matthews here from FOREX Traders. I hope you're doing great. I'm back again with another beautiful video for you guys. I hope you enjoy it. So make sure to subscribe, like the video, comment in the comment section, and let us know how we can actually help you in the comment section as well. Alright, so let's just jump into it right now. So have you seen from the chat, from the title of the video, they're going to be breaking down GBP Swiss. We're going to be doing a focus on GBP Swiss. Okay, so I'll let you know what I'm looking at, what I'm seeing, and my full process. So watch the end for you to actually get the full value in this video. Let's just start right now. So looking at GBP Swiss right now on the 4-hour time frame, we can clearly see that it's been in a downtrend for a while now. You can see that the market has actually been going down for a while, right? So therefore it's actually important, or it will actually be better for us to look for selling opportunities. Okay, so when the market is going down, it's better to look for selling opportunities. So we're going to look for fresh supply zones to sell from. So when you look at this right now, if you look at this level here, you realize that the market actually gave us something. So if you look here, so the market went to the downside, dropped, then dropped. So this is a rally based drop. Okay, so if you look at this level here, this is an area of interest right now. Okay, as you can see, the market already tried to actually reverse from here. So what you can do is let's go to the lower time frame. Okay, we drop. So let's delete this. Then we go to let's go to the 45 minutes time frame, and then you see what I'm seeing right now. Okay, so right now if you zoom in and you see something right here, you can see that clearly we have a retracement here. And as I always say, make sure that you have either a short-term uptrend or a short-term or long-term uptrend. So right here, I can identify my QML, which is here, and then my low is here, and break of structure. So here is my low and break of structure right there, and then I have my higher high right here. Okay, so I have then I have a lower low which was formed down here. So my path is complete. I have my QML, low, higher high, break of structure, and the lower low being formed. Okay, so let me just put a line here, that, then move this here, and then my break of structure right here. And if you look at the candles that are breaking the structure, they are significant candles. Okay, the next thing is to look for levels where the market is respecting as support in terms of support and resistance. So if you look at this level right here, we had some rejections here and some rejections right there. So that's my liquidity zone. So at these levels, there will be a ton of stop losses right there. Be above those levels, you have a lot of people trying to actually sell here. So this is my R1 and this is my R2 right here, and you can see the third touch. When the third time the market tried to come to this level, you see that the market actually pushed that level with momentum, taking out everyone who was trying to sell from that level. And then the market came and responded from this level right here. So you can see that this is where the market actually came to, and you can see from here that the market is actually responding very well with some rejections before the market closed. Okay, so right here is where I plan to sell from here, and my stop loss is going to be above that level right there. And let me just extend this to the right side so that this becomes a little bit bigger. Okay, and then my target becomes these lows here. My target becomes those lows right there. My stop loss is just about 15 pips, and my target is around 152 pips. That's a risk reward ratio of 1 to 10. So let me just finish up with my writings right here, my labeling. This is my liquidity zone. This is my liquidity zone right here. and then I have a rally based drop supply zone. So RBD supply zone right here. Okay, by the way, if you're enjoying this content, make sure that you subscribe, like the video, comment in the comment section. Help us grow the channel so that it can reach a lot of more people like you. More people need to see this knowledge, so please help us by doing that. Okay, so you can see this is a very nice setup, and then this right here was a compression. You can see the market compressed before it broke to the downside. So the market was compressing at that level right there. So this is our CP. This is our compression pattern right there. Okay, of course this is not CPLQ. CPLQ was going to be around this level. So it's very important for us to actually do that. Very important for us to actually remember that this anything can happen in this market. So therefore, what I plan to do is once the market opens, today is Sunday, by the way. Today is the 30th of April. So by tomorrow, we'll see how the market opens. And then as long as we have our confirmation, we're going to take this trade. By the way, this is not a signal, so you're going to wait for your own confirmation. This is by no means, I'm not saying that this trade is actually going to work out, but this trade meets our criteria. So this is how it is. So you take your own risks. I'm not saying that this trade is going to win. What I'm just literally saying is that this trade has a higher probability of winning. Of course, because it has met all our criteria. That's the reason why. Okay. So we'll I'll give you an update on this particular video. I'll actually show you what happened to this particular trade. Yeah. So let's go to the 30 minutes. Let's see how it looks on the 30 minutes. This looks pretty good. Looks well. Yeah. So this is the process that we go through every time we're identifying setups to actually trade. So this is how it's looking. We have a really nice setup right here. So we don't know how the market is going to open on Monday morning. If the market will gap, usually after market drops, usually it comes back. So if the market tries to retrace back, then that will be our opportunity to actually join and sell. So this is a 1 to 10 risk to reward ratio. Stop loss about 15 pips, and our target is about 152 pips. A really nice trade. And honestly, just need few of these per week. Just need few of these per week, and we can if you can actually have 2 or 3 of these kind of setups per week, then you'll be alright. Okay, so you guys, I hope you find value in this content. Make sure to subscribe and do all that. Thank you for watching. Until next time.